Working Man Investor back here again with Mark, the financial firefighter. Thanks for being here again, Mark. It's good to see you. How you been?
Oh, great, man. Thanks for inviting me back on. I don't know if it was a one and done thing, but I think it was a great episode. So thanks for inviting me back on, man.
Yeah, it was a great idea. It was definitely not a one and done, and nor is it going to be a two and done. So we'll have to keep doing this. One of these days, I need to have you and Jack on, and we can all three just do one of these together.
Oh, that's gonna just be too much
That
shenanigans
might
going on, I
that might
think.
be too much. Yeah, yeah. I might just hit record and sit back with a beer and watch you guys if that happens. So what have you been up to? Even doing, you still obviously you're people that don't know, you're mainly a real estate investor from what I know. You still obviously you're still doing that. Anything new? You branching out into anything else?
I'm pretty sure we recorded before I went off to North Carolina. So I was actually probably gone for about 3 to 4 weeks. My son's mom is from Burnsville, toward near Asheville, North Carolina.
Okay.
I'm actually out on workers' comp right now. I'm out on checking out a shoulder injury from the fire department, so waiting on that. So I figured while I'm waiting for my MRI, I'll take my son to see his grandparents in North Carolina. So yeah, we were just there. I love it in that area. It sounds weird. Everyone thinks it's weird when I say I live in Hawaii, but I'll probably retire somewhere else in a sense. I'll definitely snowbird, but I mean it'll be like an opposite one where a lot of people like to come here. I'll probably be spending a lot of time North Carolina. We went down to Augusta, Georgia, so we drove through South Carolina. As you can see, I went to Bucky's. Bucky's is amazing. That's like my new thing right now.
Yeah.
Went to Charlotte, and then we went to Winston-Salem, met up with some other people from the school community. So I'm not sure if you've ever connected with Val,
I have not. No.
Andy. Yeah, so some other people from school. I met up with them in Winston-Salem, and actually, even in Asheville, Hunter from school came up from South Carolina. We hung out. So yeah, it's a great community. That's how you and I connected too. So yeah,
Right.
just
Right.
basically got back for about a week ago. But yeah.
Yeah, for those that know, we're talking about Michael Zuber's school community from one rental at a time. Anybody that's looking to get into real estate investing and just network with people that have been there and done that, or just starting out, go ahead and look it up and join it. It's only like $20 a month. It's a great educational experience and networking experience. So today we're going to basically just discuss the economy, what's going on with Trump's tariffs. I wanted really interested to get your opinion on his tariffs, and then I want to discuss a little bit about the basically the temper tantrum in the bond market through last week that forced President Trump to suspend his tariffs for 90 days. So, yeah. So, you got any opinion on Trump's tariffs? I don't know if that's something you really follow that closely. I know you follow it some.
Yeah, so I mean, I'm definitely also on X quite a bit. So there's a lot of talk on political stuff, tariffs, the economy. So X is a great place to get information. It is a little toxic, but it's a wonderful place for information. You see a lot of different opinions and views there. I definitely would say that I am not. I've never been the biggest fan of Trump in a sense. I mean, I would agree. He can rub people the wrong way, possibly. Certain things he says, you're kind of wondering. But I think for me, the biggest thing is that I am um, glad that he is doing something different. I mean, I think that would be the simplest way for me to put it. And he's not just trying to kick the can down the road, and he is definitely willing to address things that pretty much every administration has talked about. We're in debt,
Mm,
we have a spending problem, but they just keep knowing that these situations are things that wouldn't be popular if they did try to address it, whether it's Social Security and whatnot. So for me, I'm definitely glad that he is shaking things up. Could he do it in a more surgical way? Possibly. But I'll definitely say tariffs. I would say probably what 3 to 6 months ago, not a lot of people would be talking about it. Not a lot of people probably would have been looking into it, and rightfully so. Myself, I mean, I've heard of tariffs. You always knew they were part of the economy, but these past 6 months, I think everybody has dug a lot deeper into it, and you're definitely seeing two sides to it, right? You're seeing different sides with different opinions. I would probably say if my easiest answer would be I am probably hopeful that the vision and what they're saying about tariffs and their plan for it is definitely kind of my side. If I was to have to pick a side, I would definitely see the side of trying to bring manufacturing back. The trade imbalance, how China probably has been, or not just China specifically, but how people have maybe been taking advantage of us for how many years. So I think from that standpoint, if all of or majority of those could happen, that's the side that I'm hoping for. Um, but the approach to me is what's the confusing part, and definitely even within his own administration, it seems like just the message is not being presented clearly, or the vision. And I think maybe that is the struggle for a lot of people, because even within their own administration, it just seems like the message is very confusing.
Yeah, and that's my biggest complaint. It's been the communication and the way that they've relayed the information to the American people and to the CEOs of our country, of our businesses within this country. Whether you are a fan of CEOs or not, we have some people that just do not like CEOs and despise them, but they need to be able to make business decisions. They need to decide if they're going to hire, if they're going to lay off, when they're going to order, how much they're going to order. And the tariffs have just created complete chaos within our economy. And you're seeing it in the volatility of our stock market. And as far as the tariffs, I'll give him credit for trying it, because one thing I can say about Trump is he's the first president that I can remember that's doing exactly what he campaigned on. Usually you see people campaign on things and they're in the office and everybody forgets about what they campaigned on. He campaigned on cutting jobs in the federal government. He did that. He campaigned on tariffs. He did that. He's rolled them out really sloppily, I think. I don't agree with the way he started it. I watched his speech from the White House, and it was trade imbalances. It wasn't 50% of what
Mhm.
these other countries are tariffing up. To me, that was just a bold-faced lie. I didn't agree with that. And when you look at some of the countries that he tariffs, I'm all for going after China. For one, I think he should have got together with Europe and worked together for a way to get China to try to do things more fairly, because certain things, like, we can't litigate in their court systems at all, and that's something that needs to change. To go after everybody the way he did, when you take Vietnam for an example, when we hit Vietnam with tariffs, Vietnam is a middle to low income country. We are the richest country in the world. So anything that we produce, the Vietnamese citizens are not going to be able to afford to buy from us in mass, in scale, because we produce luxury items or the necessities of the world: oil, natural gas, things like that. So when you start asking Vietnam to open up their economy to us, what are they going to do? They're not going to buy Fords from us. The money isn't there within their people. There are so it, to me that bothered me. And then when you look at Nike spent all that money to move manufacturing out of China, because China's standard of living has really risen. So with
Mhm.
that, they're demanding higher wages. With higher wages, your production costs get higher. Other countries are starting to notice that, and Nike was noticed. That's why they moved and spent all that money to set up the manufacturing in Vietnam. People need to understand Vietnam can manufacture a pair of jeans for $10 a pair, and then they sell them here for 30, 35. We cannot do that. So that's why I just don't think the tariffs are going to necessarily bring manufacturing back in waves to the United States. I think it'll bring some back. You'll see some Honda plants or something like that open up, and some companies open up a second or third shift. But to manufacture in mass and bring us back to the way we were in the 50s and 60s, you need the global economy. You need to be able to produce something cheap enough and be able to sell it to consumers in Europe, in Vietnam, in China. We just can't do that, because those things manufacture cheaper in China, Mexico, Malaysia, and Vietnam. Because of that, the best we can do is bring back some manufacturing and sell it domestically here within this country, and it's going to be more expensive. So everybody's cars are going to go up $7,000. In the long run, I think that hurts the American people more than it helps. That's just my opinion. But again, I give him credit for trying something. I just don't I just don't see it. I just think we've had our heyday as a manufacturing hub of the world, and that's over. We're a service industry now.
Yeah, I definitely see that viewpoint and a lot of people's opinions on that side. And I think for, like you're saying, there was a better presentation of their policies or their vision. That's probably what most people would probably get from it. But I think them talking about, like you're saying, the side that doesn't agree with him is exactly to your point. We can only bring back certain amount of manufacturing. We're never going to bring all of this manufacturing back. It's more of a trade in back. So to me, I definitely see, like you're saying, and agree with you that it's his presentation of things or how they're presenting it and how forcefully they're putting the issue out there. But like to your point too, I think a lot of it is if it's more strategic where there is certain manufacturing that does come back, like I think, COVID opened up a lot of people's eyes on how reliant we are on a lot of things that are necessary here. So if those specific type of manufacturing can come back, certain, like you're saying, certain industries that maybe it will cost a little bit more to manufacture here, but if it just doesn't make us as reliant on a country that I could probably say that probably doesn't like us in a sense. So it's kind of
Mhm.
like let's bring some things back, make that so that we are relying on ourselves. But the one thing that I do think is important too is, you kind of mentioned it, is how there's so much uncertainty out there, and I definitely think that is causing a lot of um, fear in the market, all this volatility. But at the same time, I mean, I feel like like you said, he ran on. This is the policies he ran on. He's sticking to it. So it's almost like y- companies have had time to, in a way, prepare or know what was coming. And even, people keep showing like this is not something new that Trump just came up with within the past year to run on, right? They've shown multiple videos like 30, 40 years ago that this was always kind of his plan, right? Tariffs.
Mhm.
He wanted to bring manufacturing back. So yes, there's uncertainty now, but I also kind of feel like he kind of played his hand, right? You kind of knew that this was the game plan, I think, right? So that's the only thing, but definitely the uncertainty and volatility is, and the fear is what's, and I think UE, that's kind of his term he uses, right? Fear, uncertainty, and doubt. And I think
Mhm.
that's just throwing people off in the markets right now.
Yeah. So the other thing that bothers me is he keeps not really bothers me. What he keeps throwing out is he's had 70 countries call him to discuss a trade deal, which I don't doubt multiple countries have called him to discuss a trade deal. But my attitude is, being someone that pays attention to this and studies this, is who cares? Because when he renegotiated NAFTA, his first term, and that was just Canada and Mexico, it took 18 months with two countries to come to a trade deal. So if it took 18 months for two countries, how's he even going to negotiate with 70 countries? So I think he's going to have to give a lot more than he takes. I don't know what the end game is, because again, it's so much of what we produce is going to be just too expensive for the other countries, and maybe like places in Europe can't afford what we produce, but they're still going to be able to get it cheaper than Vietnam. So if you take what we produce and what they produce in Vietnam, and it's the same thing, and you throw it in the local economy, and one is cheaper than the other, which one are they going to buy? Well, they're going to do what human nature does. They always buy what's cheaper. That's why Buy American doesn't really work here. I don't really believe in Buy American. Now, I'll buy American if I have a choice, but over the long haul, what's human nature say? Hey, we're all trying to pay our bills. We're all trying to get ahead. So if I can buy, here's a perfect example. I'm a union employee. I came home from work back in February and my hot water heater had flooded. So I told my wife, just get somebody out here. I don't care. So we got somebody out here, we got it replaced, and I got the price, and I looked at the price, I went, wow, that's a lot, but I paid it. And my wife is like, you know why that was so expensive? I'm like, no. She's like, that's all I could get a hold of in their union. I'm like, oh, that's why it was more expensive. Now, because it was an emergency, I shut my eyes and paid it. But if I was just shopping around for a hot water heater, Even though I'm union and I'm encouraged to buy union, if I can get that hot water heater for $600 cheaper, guess what I'm doing? I'm buying the $600 cheaper hot water tank. And that might be unfortunate, but at least I admit it, because most people are going to do that. Every now and then you'll buy something made in America to make yourself feel better, but when it comes overall, you're going to buy the cheaper foreign goods. And it's the same with any other consumer across the world, I think.
I was just thinking about that the other day because same thing, I had a water heater issue. So now I guess just to be contrarian about this now. So let's say, right, you're saying the American item is more expensive, but at the same time, how often are you purchasing a water heater, right? And now
Excuse me.
you're also mentioning how we're going to buy cheaper goods. So do you think that that is also part of the issue, though, is that as the US, we've been accustomed to cheaper goods and maybe even goods that are not necessary in a sense, or we're just buying things because they are cheaper. Like, I was telling my son the other day, like TVs, for example,
Mhm.
every room we have a TV in basically now. I remember when I was growing up, we had one, two TVs in the home, right? So is it also possibly that we're getting accustomed to buying cheaper goods? Now, let's say we had better financial literacy or whatnot, and we weren't buying these cheaper items because we could afford it. We're buying it out of necessity, like the water heater, right? It is more expensive, but how often are you actually buying a water heater, right? And so maybe that's kind of just had me thinking about, as far as us as consumers, are we starting to spend money or getting into this, almost like how as the U.S. government has a spending problem and put us in this position? Are we as consumers almost heading down that path of where, yeah, let's, we can
Oh,
afford this TV, right?
right, right. I think American consumers are there and have been there for a while. When you look at the statistics of 67% of Americans live paycheck to paycheck and don't even have $1,000 in their emergency fund. Now, part of that is the wealth gap has grown, and I'm not trying to say that every American is bad with money, but a large portion of our people are. I mean, I'll give you a perfect story right now. As I said, I make good money. I'm very, very fortunate. I talk about how manufacturing is not coming back to this country. And every time I swipe in the gate to go into my manufacturing job, I am thankful that I have it, because I'm part of a dying breed. And it's special to have that job. So I'm sitting in the break room with one of my fellow union members, and he's a little older than me, and he's stressing. Every 3 to 5 years, we negotiate a new contract with the company, and if we don't like it, we can strike, and if they don't like us, they can lock us out. Now, that's never happened to me. We always come to terms, but he's sweating over this contract. This contract's expiring. It's been 5 years. He hasn't saved any money. He's spent every dime he's had, and he's telling me, man, I don't know what I'm going to do, Tom. He goes, you're pretty good with money. What should I do? And I said, well, the contract's up in 6 months. I know you have those 3 Harley Davidsons in your garage that are all paid for. I said, you don't have an emergency fund. I said, this is what I would do if I were you. I said, you got a 12-year-old son. I go, he's old enough now to know what you're doing. I would take my son into the garage and explain to him how the contract's going to go up. I would explain an emergency fund to him that you don't have one. And now, despite the fact that you love these Harley Davidsons, you have to make a decision to sell one or two or all three of these, whatever you decide, so you have money in an emergency fund to protect you and your family. And that's your responsibility as the head of the household and as his father. And then you can make it into a great life lesson for your son. I go, and then if you do that and you want to talk assets and rental properties and things like that and investing, I'll discuss that with you. And you can always buy the Harley back in the future with money you've earned through passive income. I said, and how much better will that feel to ride that Harley Davidson knowing that you earned it back? You taught your son an incredible lesson, and you can afford it. You're no longer stressing when contract times come up. So he's like, I love that idea. I'm going to go home and call a couple buddies and see if I can sell this bike, blah, blah, blah. I'm like, okay, good for you. A couple months went by. We didn't work in the same department. I didn't see him. I bumped into him again. I'm like, hey, how you doing? Hey, I got to ask, did you ever sell one of those Harleys? He goes, no. You know what I did? I found a bank that works with union people. And if we get locked out and go strikes, they'll furlough all of our payments for 6 months. So I switched my mortgage over there and both of my car payments over there. So now I'm not worried about not having an emergency fund. And I'm actually going to go buy my wife the Mercedes she really wants. That was his attitude towards this crisis that had him so stressed out just a few months ago. I was like, well, I'll just move my mortgage and my two car payments into a different bank that if I get laid off, they'll be like, well, don't, you're back to work. That's not an answer. So I just think that people make so many poor decisions and undisciplined decisions. I hate the saying of when people spend money, well, that's what we work for. My attitude is I work so I don't have to work. I work to earn money to buy assets so I can get to the point where I don't have to work. And if I get locked out because my contract is up in September, or if I lose my job, not great. I'm not financially secure to the point where I don't have to work, but I have other income coming besides my job. So at least I'm not crying in my car. I can just drive home, tell my wife I lost my job, and she'd be like, okay, well, we got this. It's not, we'll figure it out. She's like, well, we got this. So I just think that I think people have a spending problem. And part of it is because we are the consumers of the world. So we're a service economy. What do? We buy cheap stuff from China and Vietnam and Malaysia. We mark it up somewhat. We stick it in our stores and sell it to our citizens. So I think you're right. It is, we have opportunities to buy things cheaper and they lure us in with good sales. But I think a lot of it is just lack of discipline and lack of financial education. And I really think that's a lot of the problem. It just
Well,
because it's, go ahead.
no, no, yeah, I know we started on like the bonds, the yields, the tariffs and whatnot, and it's kind of, this is all geared towards that. But we also kind of talked a little bit off camera before we jumped on, and I think this is kind of how I relate everything into. I saw a great podcast with Tom Bilyeu. I forgot who his guest was, but they were talking about how, before, people could have different opinions on a matter, and it was okay because it's kind of, you could agree on the what was being discussed, but you could have different opinions on it. And I think maybe in a sense that's how money or building wealth was, back in the days, right? Maybe not everyone, at some point people maybe didn't have credit cards, checking accounts, so it was kind of, you had cash and you bought things, so everyone was kind of on this same playing field, almost, in a sense. So everyone kind of had this same blueprint, buy a home, job, retirement. But now, same thing, why we're seeing so much uncertainty and disagreements, is there's just so much information out there, where some people believe in saving money is the only way. Some people believe in financing things, or having debt, or good debt, or good debt, bad debt. Some people believe in putting money in retirement account. Some people believe in the stock market. Some people are in crypto. Some people are in real estate. I think there's so much information out there that is also, like you're saying, some people are playing a different game, and yet some people are winning and losing. And I think that's where a lot of this problem comes in. So even like, like the stock market, dropping, with all the volatility, that's affecting a different sector of the market, because not everyone has money in stocks. So it's kind of like, wherever you're sitting at the table, you're going to have a different view on things. And I think that's the biggest struggle. And I think that's what your channel is about. That's what my channel is about, is trying to help people see things and make sure that they're taking their own accountability, and trying to better their situation for themselves, and that they don't have to rely on anyone else. So I think that's great about your channel. You're trying to inform people and let them know about these situations. You're not telling one way is right or wrong. You're just presenting them with information, and now you have to go and use this information to better your situation. So I think that's the biggest struggle, is that there's so much information out there.
Right, right. Yeah. Yeah. So you brought it up, the bond market. I don't know how much attention you paid to that last week when Trump had to suspend his tariffs for 90 days, but I'm really concerned about that. This is the first time in my life that I've been moderately concerned about the United States, losing its reserve currency status at some point within my lifetime. What's interesting is I always thought no, because there is not another single currency out there that can challenge us and that can do in the global economy and settle the transactions like we can. But when you look at it, if I found a graph, and in 2000, 25 years ago, we were 72% of global transactions from between countries that did nothing to do with the United States were being settled in dollars. As of 2016, it was down to 62%, I believe. And now it's at 58%. So when I did that, I dug a little bit deeper and I want to know, I thought maybe the euro was starting to take its place. So in 2016, 28% of global transactions were settled in the euro. Now, this year, as of this year, 20%. What's interesting is it's a basket of currencies: the Swiss franc, the Canadian dollar, the Chinese yuan, the Japanese yen is starting to replace and be used more in the global economy. And I know I read an article many, many years ago that I didn't really pay much attention to, and I probably should have, but the IMF had talked about if they ever replace the dollar, it would be with just a basket of currencies. So you just throw a bunch of currencies in a basket and it kind of gets used in the global economy. Between these tariffs and what I saw in the bond market last week, makes me a little concerned that we're losing the countries, the world is losing faith in the United States, because the only thing that makes our currency good is we're the strongest military in the world, we're the strongest economy in the world, we're consumers, and we have a stable government. And so if something were to happen to where we lose the reserve currency of the world, I think we'd be in serious trouble. I think we would see hyperinflation and possibly, anything could happen. World War III, because most superpower powers just don't go down quietly. They usually go down with a war. So that's one thing that bothered me when I saw that.
So when you looked into that though, so let's say I think for me, I agree. The biggest fears and concern is just that uncertainty, and I think that's why there's so much volatility and people are kind of um, taking chips off the market right now and just trying to see and get a better understanding. But when you were researching or looking in that information, are these people let's say they're liquidating their dollars or whatnot, what other asset classes, or is there information of as far as where they're storing it now, or what are they putting
Right.
it into?
Right. So what countries will do, and in some cases, very wealthy people, like very, very wealthy people, they won't actually hold dollars; they'll hold U.S. Treasuries, because that's easier to liquidate, and then you don't have to deal with, like the FICA, $250,000, it's all they'll guarantee up. So like somebody that's really, really wealthy that has like several $1,000,000, they'll have treasuries. They won't just have multiple checking accounts or savings accounts. As far as what they're putting it into, I would say number one, gold. By the way, gold has been spiking and reaching an all-time high. That is often used as a hedge against inflation and uncertainty. Silver and gold, they're talked about. I mean, you pick up the oldest book known to man, I believe, is the Bible. And if you ever read the Bible, you all talk about paying in silver and gold coins. So silver and gold coins will probably always be money as long as mankind exists, because it always has been. So some money has gone there. Some money has gone into other currencies, the euro, things like that. What was really interesting, one article I read, is a lot of the selling has come at times when the Chinese central bank is open. So there is some proof there that the Chinese are dumping treasuries onto our market. The reason it's important is because a lot of people don't realize this is we're $36 trillion in debt as a country. 25% or 9 trillion of it comes due to be refinanced this year within the next 6 to 9 months. The way we refinance our debt is through the selling of treasuries at auctions, and foreign buyers will often be the buyer. Our citizens too, and you and I can go buy treasuries. But what a lot of countries will do, since we're the reserve currency of the world, is they'll export stuff to us, and we'll buy it in dollars. They'll take those dollars, they'll settle transactions in the global economy, they'll build up a reserve dollar amount within them, and then they'll loan it back to us by buying treasuries. So if you get too many people selling their treasuries, too many countries selling their treasuries at once, what happens then is it starts to overrun the market, and treasuries, the interest rate starts to rise. It's called the yield. The interest rate is on a bond. So the bond gets cheaper to try to attract investors, and the interest rate that we pay the investors goes up. So if enough countries were to dump this on to us and the interest rate goes us up from 10-year treasury notes from 4 to 4.5, where it's running now, to something like 5 or 6. I've actually got it written down here. If it goes up to 6 or 7%, our debt service doubles. Our debt service is what we pay just in interest alone. So for every 1% movement in treasury costs, it's about $300 billion or $1 trillion over a decade, which is a lot of money. And that's where we start to get ourselves in trouble. It's not so much our debt, it's what do we have to service for? What's our interest rate? And our interest rate is off of bonds. And if we get all these countries dumping bonds on us and they overrun the market in sellers, the interest rate has to go up, which, and then they buy it back and we owe them more money. It's just, and the reason we're facing this is because Janet Yellen, the former U.S. Treasurer, made a major mistake. She refinanced all of her bonds a few years ago into like 2-year notes because the interest rate was so low. It's just like when we buy our rental properties, we're always taught to lock in that mortgage rate as cheap as you can for as long as you can. So 5 years ago when I bought my fourplex, I locked it in at 3.6% interest rate. Then I don't have to refinance it for ever. It's locked in. To whereas if I had to refinance it now, if it was an adjustable rate mortgage, a 5-year mortgage, I would have locked it in at like 7% right now, and it would cost me a lot more and cut into my profit. Same way with the bonds. When their interest rates are low, you want to try to lock it in for as long as you can. But she sold a bunch of 1-2-year notes, and it's a problem this year. So, which is to the argument that Trump is trying to induce a recession to lower the interest rate, because money in unstable times usually flows into the U.S. Treasury. And that's not what's happening right now either, which is a concern. So it goes back to the question of where's the money going? Well, first and foremost, I think gold and silver.
I saw somewhere too. I don't know if it's. Do you think there's any thought or belief that the plan is to weaken the U.S. dollar? Like that is
I'm
part of
sure.
Trump's plan?
Yeah, I'm sure. But there's a couple of problems with that. One, even if we weaken the dollar, the part of the reason that he would, just so anybody watching understands, part of the reason Trump would want a weaker dollar is because when your currency is weaker, it's better for exporting. And his goal is to bring back manufacturing. So if your currency is cheap, if you're selling a bunch of products to one country and your currency is worth less than their currency, they can buy more of your products because it's less expensive. But if your currency is stronger than their currency, it's more expensive for them because it takes more of their currency when they convert it to buy your product. So that's why he absolutely would love a strong dollar. Here's my problem with the tariffs, though. If we're as the reserve currency of the world, if we tariff everybody and we block them from exporting to us, they have no way to get the dollar. The only way they can get the dollar is to make something and sell it to us, and we produce and pay for it in dollars. If we starve the world off of dollars, and there's enough out there now where it doesn't matter, but say 6 months from now, 7 months, 8 months, whatever, we've terrorist everybody and they're no longer getting dollars. The dollars become in demand. What happens in supply and demand? Well, if something's in high demand and there's very little of it, it gets more expensive. Currency works if something's in high demand, like the dollar will be, and we've terrorist everybody and they can't get a hold of the dollar, our currency will get stronger. When you're then dealing with the strongest currency in the world potentially and the highest cost of living potentially, so your manufacturing is expensive, that is a death sentence for exporting. It's another reason why I don't believe we ever bring manufacturing back in scale to this country and export to the world. Because our dollar is going to naturally be strong because it's in demand and our standard of livings are high. So the American worker needs $20, $25, $30 an hour, depending on where he's living in this country. That's just a disaster situation for exporting. So I don't know if that answers your question or not, but so I
Yeah, no,
would.
no, yeah, and I think we keep going back around to the is to what I guess where on the playing field you are, right? Like you're talking about to some extent you believe in bringing certain manufacturing back here, not to the scale that maybe he is screaming out there,
Mhm.
but at the same time I think when you hear others in his cabinet speaking, there's a different sentiment about it. So I think that's also the issue, right? Like we talked about a little bit earlier. It's even within their administration, it seems like the presentation of what they're trying to do is still that uncertainty, and I think that is the fear out there, right? I mean, I can see like we listen to uneducated economists. You
Mhm.
listen to like Zuber and Anna Kelly had a great breakdown, right? They picked one side and then the opposite side, and
Mhm.
then they both make great points, either one, right? So I think that's the hardest part for people out there is making sense of all this information. And of course, if you go down one lane, you're kind of only going to be fed certain information, and that's kind of the side that you're going to see. So I think it's super important for everyone to get out there and kind of always listen to both sides, and kind of try to stay in the middle as much as possible, but
Mhm.
hear both sides so you can kind of have the information that you need to make better decisions for yourself. So, like I bet I'm sure you have a plan one way or the other. If like the dollar does weaken or it strengthens, right? You kind of have a vision how you're going to handle your financial situation.
Mhm.
And I think that's hopefully, and I think that's kind of my biggest takeaway from all this uncertainty, is that I think people are really reevaluating their kind of handling of money or their finances. And I hope a lot of people are starting to wake up and realize that they can't just keep doing what was being done 30, 40 years ago, saving money, putting money in traditional retirement accounts. And I hope that's the eye-opening thing for a lot of people. And just you don't have to research all these things all day long, but you do have to have some sort of understanding of what's going on in the economy. And I think for me, I was just blinded, 10 years ago, probably even 5 years ago. I was
Mhm.
still kind of just headed down this path and with my blinders on and not paying attention. And it's so eye opening to see now on how policies maybe they don't affect you day to day, but they do affect, like for me, I'm thinking about my son. How am I going to set him up for better times and better situations so that he's not relying on anyone else? And I think all of this is just great information.
Yeah, yeah, yeah. I tell anybody with a kid, the best thing you can do is one, set a good example, which you're obviously setting an amazing example, and two, just they have to be self efficient, because that's where we're headed. I think, especially if AI is anything like what they're saying and wipes out any amount of jobs. I mean, and it will some, whether or not we get to the point where it takes all of our jobs. I mean, you and I were around for when the internet first got popular, and I heard people telling me that the steel mills out here would be completely gone, and here I am 14 years into working in the steel mill. But it will potentially eliminate some. It already has. It could potentially eliminate quite a few jobs. But if you have a financial education, and if you know what to do with money and how to invest it, and you can just understand the difference between buying that asset and that liability as a young person, it's going to set you ahead of so many freaking people. I mean, it just will.
So she brought up an interesting point just now. So like you're saying, you've been in the steel mill, you're hearing about AI taking away a lot of these jobs. That could be a great episode or great topic, and I don't know how much you want to touch on it now, but like for someone like you, for a young child, or maybe someone trying to make a decision now, graduating high school,
Hmm.
what recommendation would you give to them? Would you say the blue collar side is a side that, like I think we talk about it quite a bit, how there's such this gap in the blue collar field. You know, we all went to college and all these people got degrees, and there's such a need for that. Or would you say the AI space or the tech side? And so
Right.
what would you recommend? I mean, just not
Well,
advice, just your
no, the
opinion.
first thing I would say is join my channel, Working Man Investor, and go back and watch the video I put out on, I believe it's called Work Construction to Make Yourself Rich. In that video, I talk about house hacking. If I had to do it all over again, I would have went to this junior college by my house and got an associate's degree in building construction. Then I would have got a job in the construction field, and I would start meeting whatever. I'd specialize in something: electrician, plumbing, just overall construction, framing, drywall. And I'd get to know other construction workers, and I get their phone and numbers in my phone, just like a Rolodex. And I'd save my money, and then I'd buy a fourplex, and I'd move into an empty unit, and I'd rent it out. And that way I have my particular skills. So if anything breaks, I can get it fixed. And if, say, I'm not an expert in as an electrician, I work in the field, I know electricians. Now I got to do is call somebody. Hey, Bob, my tenant here that lives in my fourplex has got an electrical problem. It's above my head. You want a side job? If he says no, I go to the next electrician in my thing. And so I would do that. And then once I was saved up enough money, I would go within a couple of years and I would look for the worst house in the best A or B area. And I would buy that house and I would fix it up and move in there. And at that point, I would turn my fourplex over to a property manager, because to me, my time is worth more money than going to save $80 flipping a toilet, fixing a toilet. But that's for the individual investor to decide. And I would live in that house for 2 years. After 2 years, provided I'm still single, I have the option to sell it and be tax free up to $250,000. Or I can just rinse and repeat that strategy, which I would do is go look for another worst house in an A or B neighborhood, turn that property I'm living in now over to my property manager, move into this new house, fix it up, and in 2 years, rinse and repeat, rinse and repeat. By the time I'm in my late 20s, I could be getting married, getting ready to have a kid, and already be financially secure. And you don't have to work construction until you're 50. Like some of these guys, you see a contract, you're in real estate, you see some of these contractors in the morning, they can hardly get out of their truck as they get older. You don't have to be like that if you monetize your skill. Take that skill and monetize it and add it to a financial strategy. So I would do that. And the other one, as far as AI goes, one of my good friends, he's got a son, really good kid, really smart, likes robotics. I told my buddy, I go, look, if your kid wants to get into robotics, that is the future. I said, he needs to go do that. And that's something that is worth a college degree. I said, and when he gets it and he starts making money, tell him to call me. I'll walk him through on buying rental properties. And my buddy's big into stocks. He's already taught his kid that. So he could have a wonderful career dealing and working in AI and have an education through me in real estate and through his dad in stocks, and understand this between asset and liability. So now he's making this great salary and he can invest it, and he won't have to work much into his 30s either if he doesn't want to, or he could become like a consultant. So that's what I would do. If I was a really, really good student, I'd do something to do with AI and robotics, but I would also want to learn investing and buying an asset. And for me personally, since I was never a good student, I would have went the construction route and just house hacked my way to wealth. So that would
Yeah,
be what I would suggest.
great opinion or blueprint. But I think like I gotta agree with you, and I think the thing that most people probably don't realize or look at is when you graduate high school, you are probably so much closer to financial freedom than you think.
Right.
Like it may not seem like it, but you don't have the bad debt. Hope I mean you shouldn't have the bad debt at that time. I mean,
Right.
you're most likely don't have kids, most likely not married. You don't have a lot of these other responsibilities. So it may seem like you don't have a lot going on, but you probably are closer to making a few smart decisions that could have you retired, like you're saying, late 20s or in this financial free. But you are so close, and you just gotta make a few smart moves, and like you
Right.
said, rinse and repeat a few times, and you are well on your way.
Yep. The drawback is most 18-year-olds have no idea. I mean, they're not thinking about that.
Well,
But
that's why they gotta subscribe to your channel and
exactly,
get
and
this
yours.
information. Yeah, well, I mean, I think
Their parents do too.
that's the one thing, right? I mean, I think
Yep.
people, the information is out there, and hopefully we can reach these people, and they can get out there and just think a little bit differently, think a
Mhm.
little bit outside the box, and not go down the traditional path, and whatnot. And like I said, I mean, just a few moves, I mean, and you'll be well on your way, and you can be looking at tariffs and the bond market and whatnot, and not really be worried about the uncertainty as much, right? You can
Right.
be paying attention to it, but also knowing that your finances are in a great situation. And this type of information is more just for your knowledge and how you're going to maneuver in it, and not be where you have to be complaining, or worried about your job, or worried about if you're going to retire in the next 5 years. Did your 401k go down, or if you have a mortgage still yet? So I think just putting yourself in a better position, is it's there for people, but it's just making a few different decisions, right?
Right. Absolutely. Yeah. So, well, you got anything else?
No, I mean, these are always fun. I mean, my channel is same as yours. I think mine is a little bit more from the mindset and whatnot, and motivating people to do certain things. Yours is definitely a lot more technical than mine. So I think that's why it's a great blend when we bring it together and get that
Mhm.
information out there. And yeah, I love doing these. Anytime you want me on, as long as we don't get canceled, yeah, that's great. But it's always fun.
Yeah. Yeah. We'll definitely do this again. I'll be in touch. So, all right. Where can people find you at again before I shut this down?
Just look for me, Financial Firefighter, YouTube, like I said, X, Instagram. I probably go live, yeah, whenever I can get people on. So we'll get Tom on some of the lives soon. And
Yeah.
yeah, just have fun with it.
All right. Great. All right. Thanks, Mark.
All right, man. Thanks, Tom.
Take care.